Day. Welcome back. Final hour session just after 3 p.m. Eastern Time on April 28th. We are wrapping up the month of April on Wednesday. We're kicking off with a lot of earnings this week. I calculated over 800 stocks reporting earnings this week. We're not sure if the full trade war tariff conversation is going to be reflected in this week's earnings. A lot of the earnings calls are punting or kicking the whole uncertainty down the road because their guidance is so difficult to figure out at this time, because right now the tariff situation's paused until July. I just saw the headline. Scott Bessent is saying that it's up to China to de-escalate, not the U.S. Okay, I mean, I still don't think there's really any real resolution. China might dig its heels in and cause some havoc. It's just not an easy situation to navigate. So I asked a question here on my Telegram channel. Big question for the markets: are we going to see all-time highs or retest of the lows? Which comes first? And I don't know. Personally, I think that my opinion is we'd probably be closer to retesting lows. Maybe it's a higher low, but I do think the lows are more likely to get retested first before we get to all-time highs. If we get to all-time highs, I kind of want to be a seller because I don't think we have really done the hard fundamental work to claw back to these highs with a super deep, broad market rally. Last week, for example, I think I took a screenshot of this. Let me see if it's in my editor here. This was pretty nuts. NVIDIA, Tesla, Microsoft alone last week made up 32% of Friday's gains in the SPX. So you've got three companies responsible for a third of the gains on Friday as the market finished at highs for the week, right? Problem is all of them in the bigger picture are still in a bearish trend signal. We still had the 50 period crossover, the 200 period. Volatility is slipping, so we've had the VIX slip down into the 20s again. We're way off the 60 highs, and so we've had roughly a 50% haircut in volatility. And I think that this is pretty spot on. The crowd is feeling too cozy right now, too complacent before key earnings. So it's going to be really tricky. Like, how does the market navigate these next maybe 30 to 60 days? It can play out in kind of an infinite amount of ways. I've spent a lot of time last week watching this level here is a key resistance zone that we are kind of hanging out above. If we have a sell-off, this is an XPX daily chart. If we have a sell-off, then perhaps this is an evening star. But I do think with earnings this week, which I have another screenshot here, some of the notable earnings this week. I talked about these in my morning sessions. MGM is a good stance to look at how the consumer is doing. MGM Resorts. How about Royal Caribbean? How about Visa for spending? How about Starbucks? How are traders doing? We've got publicly traded companies like Interactive Brokers is publicly traded, Schwab, Robinhood, Airbnb. It's are people booking and booking vacations and booking Airbnbs? Amazon is a consumption metric. I mean, even though it's a massive retailer with AWS with their web services, that's a whole different arm to the revenue. But what are their sellers talking about? Are sellers worried about the increases of their supplies, increases in their inventory? But Big Mag 7 this week, Microsoft on Wednesday, Meta on Wednesday, Amazon and Apple on Thursday after the close. Apollo, that's wealth management. Also some energy, Chevron and ExxonMobil. We'll see what those give as well. I still like energy as a nice diversifier. This whole idea of building out the AI infrastructure is going to have to take big energy to support it. I don't think big energy is going to survive on just oil alone. Obviously, oil broke that 62 handle. I don't see oil really going to $100+, and I don't see it really going down below $50 to $45. So at best, maybe a range trade on oil. But bigger picture is, what are we doing with the electricity grid? What are we doing to build that out? What are we doing with data centers? What is AI going to look like in the next 5 or 10 years? I mean, supposedly that's the future. And CapEx spending is still quite high. I think Google talked about it last week that they're still hitting their $75 billion CapEx budget. So I think if they're still doing it, then I wouldn't be surprised if the other Mag 7 companies do it as well. But this is a big week with earnings over 800 companies and some notables right here. All right. So this week, what to watch for? I don't think the market's going to really have a sour taste necessarily, but we've had a big rally since last week. And is it possible that we just melt up a little bit higher, maybe carried by the Mag 7 earnings? Sure. If they come in solid and stable, maybe there's some built-in resiliency here. So if we go to the MAGS ticker, which is MAGS, there's still room to get up into 47.85. There's room to drift back into these clusters of moving averages around the $49 to $50 zone. Mag 7 might also have ability to make a fresh low well, not a fresh low. I was going to say a higher low. We have a gap right in here. Okay, so is it possible that we hit a trend line that looks something like this? Maybe Mags makes a trend line like this where it goes low to high, higher low to higher high, finds some symmetry. This becomes a harmonic pattern, right? And then this resistance area sells back off for a higher low, or even sells back off for a fresh low. I don't know. But if Mag 7 is down, pretty sure the broader market's going to go with it, and a way to keep watching market breadth. There's a ticker here in my watch list. Where is it at? I think it's like S5FI for the 50 periods S&P. We have come off the lows. I was long the S&P right in here, and that was a pretty well-timed trade. That was right before Trump's announcement to pause tariffs by 90 days. I have been talking about this the entire year. If you follow me in my live sessions, I was mentioning this for weeks and weeks and weeks. Is market breadth may not have felt the pain yet, but eventually when we did get down to this 11 handle and lower, we had like 95% of all stocks below the 50-day moving average. That was a good short-term timing indicator to get long, and it worked out pretty well. Nasdaq, same thing. Down here to these levels that we haven't seen since the bottom in September 2022. We were close to this in the bottoms in Q4 2023. So again, pretty good opportunity to get long the Nasdaq, and that worked out pretty well, at least in the short term. So I'm still watching this to see, does market breadth stall and stumble and get back down to these lows? If so, we could have another flush to retest lows, but maybe an opportunity to buy the bottom. I've been reading a lot about this Zig thrust, whatever the hell it's called. What is this thing called? The Zwig market breadth thrust indicator. Okay, so I guess it's 19 for 19 when this thing activates. We've had 19 of 19 bullish trades, and I got activated. Well, I see that it was down here at a pretty strong low. I've got this drawn to a 0.45, and this is just one that I pulled on TradingView. But a 0.45 value, you can see, doesn't get hit very often. I could probably bump this up to like a 0.46 because that was a low this year in 2025, a low back here in Q4 2023, and a low back here in 2022. So I would say even there, I would say if we test that low, that's something to respond to. So like a 0.46 value on the downside. And I don't know what technically this indicator consists of to say like this is a sign to go bullish. Sure, but what's the runway? Is this a big picture where it's like over the next 1 to 3 to 5 years, this is a bull? Oh, of course. If you're looking out 1, 3, 5 years, I'd be pretty confident the market's higher too, which is why 19 of 19 is great, but it's also talking about a 90-year run in the market. So pretty easy to give the market 5 years and find a way to carve out some gains, So I'm not, crapping on the indicator. I'm just saying, like, I don't know what the time horizon is. I don't think this is good in the near term. I think right now this timing would be terrible. If I was long right now, I would want to be looking out at least 1 or 2 years for me to say, like, I'm confident we go to all-time highs. I'd have to give myself like 2 years of time. There's no way right now I'd feel confident that we're going to all-time highs in the next 30 to 60 days. So the timing indicator for me was the Nasdaq and the S&P above the 50-day. That was beat down to a pulp. That was a good timing indicator in the short term. Okay. Yeah, so I got JB saying I think we'll retest lows. Man, give me your comments. What do you think? So this in Telegram, right? So what do you think? Retesting highs, which comes first? Retesting highs, retesting lows. Personally, I think we're going to retest lows. Okay. And again, it may not be at the exact same bottom. It might be a higher low, but I think the market would probably dip lower before it keeps ripping higher. And let me define rip. Is there room in the S&P to get up to higher levels? Of course. There's room for this week, especially with Mag 7 earnings. Mag 7 could lead this market into a slightly elevated area where there's just a lack of selling, right? This is a low volume recovery. This is not a market. This isn't a broad market rally. This is a low volume recovery. This is a melt up. This is the market being reflexive. And so if we pull back into, let's say, 5,700, 5,800, I'm not going to be super skeptical there, but I wouldn't be surprised at all if that is the bull rally in a, I don't want to say it. I don't want to say bull rally in a bear market, because we may not revisit the low lows, right? This might be a trade that comes back to connect the dots off this low, connect the dots off that low, and then stretch this thing out. Let me just use a 4-hour trend line here. So let's go to this area and connect the dots off of a 4-hour. So we have this low from the 7th of April into that low right there. So is it possible that this week the market finds a way to drift a little bit higher, right? And maybe we even have a channel here. Okay. So I'm not just going to turn around and just aggressively sell the market. I'm just saying, if I got the portfolio going up and up and up, I'm going to start replacing some hedges here. I'll watch for some positioning. If we get a higher low, there's a gap fill right there. If we revisit this low, obviously we know where the big low was on April 7th. So I think traders are going to see some sentiment swings. Last week, we still printed an above 50% AAII. If I go to that data point here, I thought this was interesting. I think this is like the worst streak we have had in like 30 or 40 years of sentiment. I'm going to go into this sentiment access here. So market sentiment, we'll go AAII. 1, 2, 3, 4, 5, 6, 7, 8, 9. We've had 9 weekly readings from right here to right here with the bear bias over 50%. The historical average is like 33%. So this market has been way more bearish on the put side, or way more bearish on the sentiment side, I should say, for 9 straight weeks. So I get it. I can see why the market is nervous. I can see why the surveys, the surveyed members are nervous. But clearly the market is climbing the wall of worry, as it tends to do. And when the crowded trade is scared and the crowded trade is, buying crap tons of puts, the market tends to rally on that. So I wonder if this switches, if we go to like a sub 50 print, if that all of a sudden starts showing like, okay, hey, a little more optimism in the markets, but you're late, because we've now had a couple weeks of rallying. And if you're starting to get bullish at like 5,800, 5,900, I just think that is limited upside. If I look at the market here, I mean, if all of a sudden our sentiment readings are showing bullishness and it's up here, I would say we're probably capped at a move just at the highs. And man, I want to short this market, because I think, maybe best case scenario is we have not really seen an earnings compression that is reflected in the markets. Like this drop in the S&P only brought the price to earnings on the S&P from like a 25x to about a 21x. Right? Like that's not a 17. That's not a 15. That's not when this market forms like major generational buying opportunity lows. That price to earnings multiple is still way too high. So if we get back up to these highs again, and we're right back up to a 21, 20, let's say 25, 26, 27 multiple, man, that's crazy high, especially if it's not a full market breadth rally. So I'm very skeptical that these highs can be sustained. And I don't think it'd be surprising to see the market get to highs, have this thing be a bull trap. And we are putting in, and this is very similar a la 2018, very similar to also what we did in the late 90s, very similar to what we saw in COVID. If we have this major low, I mean, heck, this market might do in something like this. We drift to slightly higher highs, or maybe even connect the dots here, and we connect the lows in here. Right? Like I'm not trying to go too bearish, but I mean, what type of trade would be like the most painful? Well, right now that everyone is bearish, the most painful trade is going to be prices keep going up, because everyone that has been like dumping and selling down here is missing out. And until they are convinced to come back in from the sidelines, I mean, the problem is they're going to jump in when the market's sitting here at these highs again, and they'll be like, "Whew, I didn't lose anything. What a crazy drawdown. I'm happy I stuck through it and stayed in the market." And then they go back down again. Like that's the wild and crazy stuff that a broadening pattern, it is a terrible pattern if traders don't know how to trade it. Like I want to trade that, and this broadening pattern can be a really lucrative thing, because if you're short the market and we come back down and make an equal low or fresh low, that pattern is incredibly profitable down there. And if you're buying low, it's incredibly profitable back to the highs, which longer term I'd obviously like to be bullish in the market over the next 3 to 5 years. So we could have some wild and crazy swings in 2025. Who knows? But we're going to remember it for something. You want to queue up this conversation end of the year. Let's talk about what 2025 really meant for traders. And if anything, it probably means just wild and crazy stuff, crazy volatility, decisions that were like half thought out. Maybe things work out well, maybe things don't. I don't know. I think that's the scary part, is it's so ridiculously uncertain that I just think it's hard to position for it. So be tactical. I got a question today in from Prosperity Pub. What's the top rule? The top rule that traders need to know for trading highly volatile markets. And my response was rule number one is risk less. I think if you want to survive these markets, there's plenty of opportunity to trade. There's plenty of opportunity to look for good reward to risk. But the last thing I want to do is trade a big trade size where any one trade could sting. That's the last thing I want. So I'm thinking that I want to place plenty of trades when I think they're opportunistic, but I'm risking way less because these markets can still offer really good returns on steady mechanical trades. They can offer big asymmetry because these volatility swings can be so drastic. There's all sorts of ways to turn these into profit. So anyway, look out. So whether or not we hit some resistance and roadblocks ahead, let's see if there's a ceiling anywhere between this current price or this kind of 5,800 handle. If we hit that level, I know there's going to be some arguments, and you're going to see this traded. It's going to be on Twitter. It's going to be all sorts of analysts that are talking about like, oh, look at this. This is a bullish pattern. I see it too, right? But another tricky spot of that bullish pattern, like a head and shoulders, would be the best way to trade it is the break of the neckline. Because if we form a neckline, right, or we form a slightly lower high, that neckline is technically where the bulls would have to jump in and confirm. Because what could happen is we could test this level, fail, and then work our way back down to the lows. And this is never a valid head and shoulders because it never broke the neckline. So I don't want to get faked out into thinking like, oh, there it is. That's a bullish. I mean, maybe it is. But I think there's a lot of time between now and July that this market has to figure out, are earnings good? Are the numbers and the job reports that come out this week on May 2nd? We have non-farm, we have ADP this Wednesday. I mean, we're going to start to see some data that's coming to the market. This is the conversation of soft data becoming hard data. Is the U.S. labor market going to be stable? Our jobs going to be stable? Our earnings going to be solid? I mean, if all those things are yes, then sure. There's this less risk of recession. We might see some of the big investment banks scaling down their percentages. I mean, I saw J.P. Morgan forecasting a 50 to 60% chance of recession this year. That's really high. They were like 20% going into the year. Now it was up to 50 to 60%. That's excessively high. But it doesn't mean they're wrong. It just means that the worry has been it's in your face. So as illustrated by this, and like I said, the market does a great job of climbing the wall of worry. So if we are surprisingly higher, where we do get back to all-time highs, that's great. But I'm going to take on some very big asymmetry hedges just in case. If we have a period like 2015, 2016, if we have a period like 97, 98, 99, if we have a period like 2018, 2019, 2020, that was nothing but ups and downs and ups and downs and ups again. I mean, that pattern can drive traders nuts if you don't know how to position for it. So there's a lot of volatility with that broadening pattern, and I wouldn't be shocked to see it play out. All right. So that's that for the day. S&P kind of fought back. We took a trade this morning. Daily profit play had a nice little win, 2 for 2. Around 11 o'clock, the market did dump a little bit lower. We found some gamma levels and some structure, but we're right back where we started. Essentially, we opened up around 551 in the SPY. We're back to 550 and change. SPX, same thing here. So we open up on the day, open up around 55.30. Came all the way down here to 54.70, so about a 60-point drop after a little jump higher, and just came right back to where we started. So Monday, typical Monday, which is nice price action. It was a little bit more volatile and violent from high to low, 54 to 70. So we're talking about an 80-point swing today. I mean, that's not nothing, but it's way less than the 2, 3, 400-point swings we saw during that early April chaos. Okay, so we're flat on the day. S&P is down 0.02%. SPY down flat at 0. Futures market flat. Nasdaq is down 0.15. QQQ down 0.11. Dow is actually up today by 0.3%. Russell up a little bit, 0.18. Volatility is flat. It says 1.09%, but that's barely up. VIX 1-day is in the red a little bit. The move index was bond volatility. This is a good sign. Let's see what TLT is showing us. TLT is up. Very nice. US 10-year is down. Good. That's a fresh low on the day. Let me actually text Give me 1 second here. Okay, I'm going to text the mortgage brokers that I'm dealing with right now, because let's go here, email. May 27, closing date, estimated to close at 10:30 a.m. with Cottonwood title. All right, let me get some info, but that's a nice fresh low on the 10-year. I'm just watching because in 30 days, I'm trying to close on a house that is hopefully improving rates as the 10-year is dropping. So maybe we need to see it close on the day and get some fresh recalculations for tomorrow. But I'm trying to look at a 30-day and 15-day lock. So I've got, I'm not going to say the best rates, but manageable, tolerable. Like literally during this blow up here, I was getting quoted like 6.8, 6.9%. Now it should be closer to like 6.5 ish. And anyway, that's for me, not you. So, all right, let's see what else we have on the day. S&P flat. I left off on the Russell. We went to the VIX. Let's go dollar. So we actually had a pretty decent amount of currency movement today. Gold. Did gold rip up today at all? Gold. Kinda. Yeah, I mean, I guess gold was up a little bit on the day, so gold's up almost 1%. So pretty good structure at 32.70. I think this is still a consolidation window. I don't know if we're going to revisit highs. Gold might be a flat pattern. I'm not buying all the crazy dips. I mean, this is a 4-hour chart. We had some strong support there. Look for the same situation on gold: high, low, lower, high, lower, low. Love to see a little dip on gold to buy some more. If anyone's like, "Oh, I'm buying," I mean, maybe you're buying so aggressively. I think if we get to the highs, I'm still going to take some profit. I think gold can go higher, but if it goes higher, it's going to be a bubble, which isn't a bad thing. Like gold bubble, I mean, who knows where the top is? Like literally, gold could go to, I'm measuring out like 3,800, but we could hit 4,000 plus. We could have this crazy safe haven, bubble in gold. This could be just a big dump against the dollar. But I think if gold is reverting at this time with having a high bar count on the daily time frame, we're probably going to pull back into some daily levels. That should be something around. I mean, I would think one close below. If we go high, low, lower high, lower low, that puts us down to maybe finding like the $3,000 mark is a good strong level. It might not get that low. Maybe it pulls back to like 3,100. If you're interested, looking at chances to buy in a smaller time frame. And I don't know if this is necessarily the high. I truly think silver is a better technical trade, but gold is certainly acting like the better safe haven right now. If it comes back up to the highs again, I'm not super excited about that. Outside of if it blows through the highs, okay, fine, it's a bubble. If it comes up to test the highs, but it fails, I think this is a range trade at best, and possibly a revisit of the lows, and we have some type of like little correction, right? But time will tell. Dollar index is down on the day, still not breaking the lows that we saw from April 21st. But looking at the currency strength again, Japanese yen on top today, Swiss on top today. Those are both risk-off trades. Pound was interestingly strong. Dollar CAD weaker with the Kiwi. So I think the dollar, still watch the dollar closely. We're going to get a squeeze trade in the dollar at some point. I think this dollar ends up breaking, whether it's a little bit lower first, and this dollar ends up ripping back to like a 101 to 102 level. It's just really good trend line resistance, right? I think the dollar gets back to this area, finds some pockets, finds some clustering, and then reverts back to a bigger sell zone. This to me would be my sell trade on the dollar. If we come back to the trend line, looking to sell it there. instead of trying to call the bottom right now. I don't want to call the bottom and sell the dollar at the lows, and I'm not getting any confirmation to start buying it either. So I got to hold off on that trade for right now. Oil. I said this, like, I'm staying out of oil. I think that, strangles, iron condors, capitalizing on some indecision on oil is working out very well. I'm just not taking that type of backwards reward to risk trades on oil. I just don't think it's a great trade. The one trade I would consider on oil would be if we come back down to lows again. I would be looking at a higher reward to risk trade off the bottoms. So I think it's going to be painful for oil to really get into the low 50s. But I think it's also painful if oil gets back up into the high 80s. So, if we're lucky, it's a range trade. If it stays sideways here, that's okay. I'm going to miss out on some opportunities, but I'm saving myself a lot of volatility and headaches by I don't really know what oil wants to do. There's so many supply and demand issues with it. I don't think that Trump can say drill baby drill and try to drive prices down into the 40s or 30s or 20s, because nobody wants to refine oil at that price. It's not profitable, So I just don't know. I think if we stay here, I think oil looks better to have some defined risk upside, where I can take a trade that maybe I risk $100 to make $150 and take that trade, right? So if I do like it, I'll take a trade on CL. Gold, we talked about that one. I think best case on gold would be we come back up to the high, or if we make a higher high, it's going to be divergent, and then gold comes back in for some corrective pattern. But if it's high, low, lower, high, lower, low, okay, fine. Gold has clearly maintained a lot of bid here, so I wouldn't be shocked if it comes back up to the highs and it's a consolidation. But that's it. I still like silver better. Silver chart alarm to me is XAG has to hit 34.88. I'm really excited for silver. If we can break above these resistance levels, this is a big, big, big resistance level. Because if we break above this, there's not much stopping silver from a big, long, strong wave. This to me is a measure move on symmetry. Let me take a fib here from low to high. Okay. We had a pullback to honestly, this is a crazy good technical trade. The 618 pullback is right here, and the 618 extension is right here. So I'm going to put another line on my chart. Let me clone this line here. That level is going to be basically a D extension / low, high, higher, low, higher, high. Silver has room to get up into 41. Okay. Now, the good part about that is that would only be a fulfillment of maybe a wave 3. So if we're going to have this like wave 1, all this is wave 2, this is still pushing for a wave 3. I'm curious how this plays out, because we could go, to the symmetry level, pull back again, get up to this leg, pull back again, go back to this leg, and still get to those multi-year highs. This is a 2011 high and a 1980 high in silver, all the way up here towards $48. So I technically like silver a lot more. I have more shares in silver. It is cheaper. It's easier for me to build that position. And I think silver as a measurement has better potential. I know that it's not a precious metal. I know that silver is more of an industrial metal. I think there's going to have to be some good developments where it's like, look, China's building out this for AI infrastructure. US is building out for this for data centers and AI infrastructure. Houses are playing catch up. Commodity space is doing well. Like, it could probably benefit more on the industrial side than a safe haven side. But if gold is so expensive relative to silver, I think that silver plays catch up. So just want to get some measure moves out here. This is a symmetry level. But if we break this resistance, look, take this resistance and just break it up and go higher. Well, that kind of puts you right into that measured move around $41. If we hit this, let's say we check that box and we hit $41. Any type of pullback here, I am buying dips, because I think we're going to finish up around 47 to 48 bucks. And that would be lots of resistance to become support here, lots of resistance to become support here. Any dips on silver, I'm going to try to scoop up and buy. Does that help there, Dr. Barnes? Okay, silver futures, again, watching. Let me plot. There's my symmetry swing. Let me plot that fib. There we go. So there is my 59.49 futures trade. Clone that line right there. So that's what gets me pretty excited about silver is, man, we could have a 79% move to hit some measurements. Like, that's hard for me to say, like, I'm looking 80% higher on gold. That's huge, man. Like that's gold trading at like what, $6,400 an ounce, just off of that, like going up 80%. Bitcoin's postured to be pretty bullish. We did hold these recent highs. I put in a fib swing. It did a pretty nice job of sweeping these highs. So a low to high swing, if we pull back to, let's say, a 38 or a 50% zone, I think this could wave its way up and try to get into all-time highs. So any dips and pullbacks, I'm liking Bitcoin. I'll probably position myself on IBIT. I sold some puts on IBIT all the way down to the recent lows. I sold some January puts of next year and some December puts by the end of the year. If price goes up to the highs, I'm probably going to see maybe 60 to 80% profit on those puts, just because price has appreciated so much. So that could be an easy income trade. And I'm still holding shares of IBIT. That would be a pretty good upside too. That would be a run if we're going to get up to those highs. That's another 15% to revisit all-time highs. If we get a dip or a pullback, then it looks even better. This pullback towards the 50% zone. Now we got 28% to the upside. I don't know if we're going to go too much lower than that. We've got some structure back in like the 83,000 zone. Maybe 83 to 80K. It'd be a little shocking to me to go back to 73,000. The lows here around 74. I think it'd be a little bit more of a surprise to see it retest the lows, unless the stock market retests the lows as well. But if there is a higher low in Bitcoin, I kind of want to take some exposure to that and buy the dip. Okay, IBIT, this is what I'm watching for. I do have a covered call out to June at the highs. So at $62 highs, I've got covered calls. I don't want to let the shares go. It's just an income trade. I would roll it. I'd roll it out. I'd roll it up. I don't want to let the shares go. If we're going to all-time highs, I've got measure moves on Bitcoin up to 120, 130, and 160 this year. I don't know if it's going to be this year, but that's just the bigger technical picture. So if we get a pullback, same thing. There's your low, there's your high. Look for a pullback. I like that area for swing trades and see if we get to all-time highs. Okay, MicroStrategy. This one by June, I need to stay above 310. We'll see what Bitcoin does, but if it stays above 310, then I get it called away for about 15K in profit. Coinbase, fine. I took some income trades here. Ethereum, still not going to touch Ethereum unless we get on the right-hand side of the trend line. Copper is a huge mess. I think a dip on copper could be good. If we have a high-low kind of a flush out trade, if we have let's say a pullback on copper, then maybe a trendline break that revisits some highs. But I think we have to have positive trade war. Is that an oxymoron? I think we have to have no trade war. I think we have to have positive outlook on this whole globalization and global talks and trade. Because without this, this is called Dr. Copper for a reason. This was when things felt a little systemic and things were dumping. And it happened. Now, there's been obviously a reflexive move on copper, and it's gone up, which is nice. But I don't know if this goes back up to highs again, which are all-time highs, by the way, or has to settle back in for something different. Maybe this high, this low is so big that it's going to be like, I call this the tuning fork, right? If you imagine like the U-shaped tuning fork, right? And you hit it with a little rubber mallet, and all of a sudden it vibrates. Well, it vibrates, and that's kind of the wave pattern that we would see, is just this big indecision wave. So rather than trying to chase this run to the upside, it's like, let's just see if copper can pull back. If copper pulls back for a high or low, look for a short-term trend line, maybe position myself for a position below the lows with a risk-defined trade. And if it goes back up again, maybe some income. I made about $1,200 right below this low. And if we pull back again, I'll position for something very similar. Probably make another, try to make another $1,000 or so if possible. All right. Japan shows Japanese yen is getting a little bit stronger. Nikkei up slightly on the day. FXY. This is my Japanese yen shares that I own. I measured this one out for a potential head and shoulders. If this is a head and shoulders, I'm going to hang on to FXY up to $74. I own this instrument down around $59. So if I'm going to get long, that's a big, scary run in the Japanese yen. But who knows? This could be an interesting development where, safe haven is Japanese yen. Safe haven is, the Nikkei and the U.S. markets are kind of correlating really strongly versus like the Eurozone or China compared to the U.S. But it's the one central bank right now that is raising rates. Japan went from negative to 0 to positive 0.1 to positive 0.25 to positive 0.5. If they are going to continue to raise rates, ultimately up to a 1% Japanese yen, I might want to be long the Japanese yen. While other central banks, Bank of England's cut rates, Canada's cut rates, US's cut rates, Eurozone's cut rates, they're all cutting rates, right? I mean, this is an interesting divergence in monetary policy. So I'm not trading this per se with currencies. I mean, my exposure in currencies is mostly Swiss crosses, but FXY is a way to stay long the yen by just owning shares, and I bought it when it was way down here. So it's not a crazy move. I mean, I have, I don't know, 1,000 shares of it. So if it goes up from $59 up to 74 and change, it's like I make $15. Okay, so I make around what, $4,500. Nope, sorry. $15 times. My math is great this afternoon. I make $15,000. I'm like, I'll make $4,000. I was thinking like 5 and 15 for some reason. Anyway, it's if, right? Because if it doesn't happen, well, then we have a range trade and this thing just goes nowhere and it's sideways on the Nikkei, it's sideways on the Japanese yen. And you can look at a currency trade like dollar yen and see that it's also a range from the 162 highs into the lows around 139 or so, right? I mean, would anybody be super surprised if this low holds and the Japanese yen works its way back up to this range? Not really. This wouldn't be a surprise, right? So, I mean, we're very close to hitting lows. We're very close to hitting symmetry. However, I've got to ask this, if we're about to see higher volatility in the Forex market, higher volatility in the stock market, if we're going to see this, this is a major break. And if we break these lows and this is a head and shoulders neckline, that measured move is all the way down here at 120, which comes all the way back down to where this thing broke out in 2022. So that's not the asymmetry trade. The asymmetry trade is low risk, high reward up here. All right. But if this thing breaks the neckline, any retest of the neckline, I'd be looking for sell, 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 sell with a stop loss up above. And that also offers some high reward to risk. But that's a big change. That's a really big change. Like that's Japanese yen for the next 2, 3, 4, 6 months, just gaining and just like crazy volatility. I don't think that's the case that the stock market's going to be resilient and bullish. Is we're not going to see a stronger Japanese yen. I don't think, because that's mostly a risk off flow. Okay. I just moved all the strike prices up $5. Yeah, Joey, that's great. I mean, if you got filled similar and moved the strike prices up, that's fair. You're talking the trade on QQQ today? Yeah, that's a good adjustment. EWJ, I'm long EWJ. I bought 2 levels. So my break even is right in the middle, and right now I'm up into profit. Same thing. It's like I'm going to see if this wants to go higher. The nice reason about this one is it takes away the bottom 15% of the Nikkei 225. So this, I mean, look at this recovery compared to the Nikkei 225. Big difference, right? Like this would be the Nikkei. It is not even close to those highs compared to the FX or the EWJ. So it's okay. But if we go higher, and maybe we do, maybe we don't. Maybe this is a range. Maybe this is resistance, comes all the way back down, and I'll just kind of hang in there and wait it out. I might actually add another level down here and try to pull my break even, which is around $65. I'll try to pull that break even down a little bit more by making a slightly bigger play at the $61 low. And then the next time we get to the highs, I'm taking profit. I'm not going to sit and hold this trade for a long time. Okay. DAX, I was looking for a cup and handle or a pullback. We never had it. If this thing, it melts up all the way to the highs, be very careful of a potential pullback. Okay. I mean, I'm surprised that this thing really offered no real pause, no real bull flag, no real anything. So if it just melts up and just keeps going up and up and up, I mean, I suppose any dip could be bought because there is momentum in this German index, but I just want to see if I get a pullback first. Also, this could be a very real environment for the next 30, 60, 90 days until this tariff stuff is a little bit more clear what the markets can do. We don't break the highs, we don't break the lows, and we just dance around. I could very much see the market doing this in a lot of instruments. I could see the S&P doing it. I could see the Nasdaq doing it. I could see the Dow, the Russell. I could see the German index doing this. I could see a lot of stocks. I see copper doing it, right? It's just a lot of indecision. Yeah. So that's the German index. So FEZ, let me check my puts on this one. FEZ here. Sold a bunch of puts. Somehow they're still negative, even though I sold 47 puts for a total of $3 and change. I don't know how I'm not showing more profit there. I mean, they're essentially like leaps. I went out like 250 days, 260 days, but I'm surprised it's not showing any value. That's kind of the problem with non-US is the liquidity and the time decay. It's like it's so long to go out 260 days, but we shall see. FTSE, I like UK less. Argentina, I'm not. I missed my dip, so I'm out of it. China, still looking okay. Really slow, a really big slowdown in China. High, low. Is this going to be the same thing? Just a big slowdown, lots of volatility. I will say this: if China US come to an agreement, something tells me that China could also take off to the upside. So it almost would I would like to be positioned for something like this in China, where rather than just like, oh, China goes all-time highs again, I'd like to see a price just kind of settles in, offers up a ceiling to break, and then rally to. So this is a low to high, a little bit of a pause right here. Could be a great looking bull flag. If I were to buy this, stop loss would be below these lows. And that's kind of trade one. Trade two would be buying it at the lows for a very good, reward to risk. So I still like China. It's just I think it's going to have to be U.S. China have to play nice, figure out the terms, and then we'll see if the markets can get some optimism baked back into it. Brazil and Latin America starting to push pretty nicely. So I have shares of EWZ. This one for me, trying to get back into maybe the 35 handle, maybe bigger pictures. I want to hold this into the 40s. I bought this thing around $26. ILF Latin America, I bought this around $22. So it's up a few dollars, and hopefully we're heading back into 32 or higher. So that's some LATAM exposure. Mags. This week we have 4 big companies reporting. Wednesday is Meta and Microsoft aftermarket. Thursday is Amazon, Apple aftermarket. Is it enough to get this back up into there's a high, there's a low, here's your 50% zone. Are we going to pull back to that level right around $49? We'll find out. Markets, I think, just turned positive on the day. I'm just looking at my other screen. So can Mags get into this 50% zone? Is it possible that we hit resistance, at the 50% zone? Is it possible we pull back to like a 618? 618 would be, I think this would give investors a little bit of optimism. My concern is that this is still a resistance point that could be faded pretty hard. So if Mags turns south, we're going to have another drop to the downside. I think broader market would be down as well. But hopefully this week, a little relief goes a long way. 50%, 61% retracement levels. Keep an eye on those in case the market, number one, can rally to them, and two, also turn in resistance off of them. Apple on Thursday, Amazon on Thursday. Google last week reported earnings. I've got some shares in at 150. I dollar cost average in. I had some ratio spreads also in. I'm watching those closely. Meta still waiting. Meta has earnings on Wednesday, but for me, like bigger picture is I want to see Meta down here. I'm going to try to get Meta for a asymmetry position in like the 450 or under handle. I think this would offer some really good profit if I could position here. Bigger picture, go out maybe one to 2 years, see if Meta can get back to all-time highs. Pay let's say $2,000 to $4,000 here and have a 5-figure reward. If I'm even remotely right, I'd be looking to take some good profit there. Microsoft, if we somehow revisit lows again, I'm probably going to take more income trades. I did a lot of income trading here. I never owned Microsoft once. Didn't get assigned. Income. I've got some other trades out. Income. I have some shares of Microsoft, but I think this is a pretty good spot. If we go from high to low, that's a 30% correction in Microsoft. I would position for very similar trades and strategies. I position for this to be, I don't really want to have 100 shares, but if we did come back to this yearly moving average, anything in the low 300s or even the 275 zone, I'd be willing to allocate something to it. Netflix also up to some fresh highs. I looked at a call trade this morning. I'm just not going to sell the top. Netflix is running higher. I'm not going to take the trade and try to call the top. But we had a nice little earnings trade last week. It was a small winner. I did the expiration was a week later than it should have been. We had last week it was I think I took like a 15 or 20% winner. And had I done the 25th expiration? What was last Friday? 25th. Had I done the 25th expiration, it would have closed out for a full $5 credit. But it said I closed it for like 320 or 330 or 350 or whatever. It was like a 15 or 20% winner, which was fine. It still won, but it sucked. Like I wanted more profit there, especially since it blew through the expected move. Anyway, not calling the top on Netflix. If you have any shares of it, great. It bounced right off the 200 moving average. We're up to some fresh highs. Are tariffs going to affect Netflix? Probably not. This thing looks great for subscriber growth, revenue growth. I don't know what comes next other than people just stop paying Netflix prices. At some point, it's like, is a $20 subscription cost, a $25 subscription cost, is $30 subscription cost. I don't know what that hesitation is. Like, I personally don't mind $20 a month on Netflix, but I do mind a $50 to $100. Like YouTube TV, Google owns it. I dumped Google YouTube TV when it jumped from 40. It was like $49.99. It jumped up to $70 or like $72.99, and they were jumping it up again to like $85.99. I'm like, that's it. I'm like, my threshold is like, if I'm going to package these streaming services together, like I'm not paying more than like 10, 15, $20 a month for them. And so if YouTube TV is $85, I'm like, what the hell's the difference between that and having cable? You know? And I mean, hell, DirecTV now is way cheaper for the promotion period, and then you got to always fight with them. It's like such a freaking game to just, why can't you just cut the cord? You know, and internet's the same way. It's like you just assume. But anyway, I'm talking about the only way this really turns south is if all of a sudden they start losing subscribers because their prices keep going up. But I think they've got plenty of runway now. I mean, they went from a $5 DVD to now a $20 stream service with 4K, and their offerings, their content. I mean, they buy everything. I think they've officially cemented themselves as like the king of streamers. I don't think anybody's coming close to them right now, but it's also at all-time highs, and I'm not going to buy at all-time highs. Anyway, moving on. Nvidia at 108. We had earnings on Nvidia, did some gap fills. We have earnings again late May, so right now it's more this chip conversation. Semiconductors have been volatile, SMH has been volatile, SOXS has been volatile. Nvidia, I mean, it's part of the Mag 7, but some of the recovery last week, that was Nvidia, and it was Nvidia, Tesla, and Microsoft. They led 32% of the rally last week. So point is, I mean, it's still not looking bullish to me. I mean, at best you have maybe a range here. And if this is some type of structure where you got a low to high, a little bit of consolidation, do we build off that? Yeah, maybe. I could see Nvidia coming back to like 120, 125, 130 again, but not really getting to all-time highs yet. Not for a while. Obviously, retesting the lows could be a thing. We go low to high, we retest like lows, maybe putting in some more bottom picking instrument. I mean, sell puts. I'd probably sell some puts. When did you speak about MO earnings? I don't know if I did. Do they have earnings this week? They have it tomorrow before market. I'm not going to put a trade in. We got 4 minutes for the close. I'm not going to get a trade in on MO. So, I mean, this is probably going to move like $1 or $2. There's not a huge surprise. This is a crazy low volatility stock. Expected move on this one is $2. I mean, the option chain, you're not getting 50-cent options. You're getting dollar options. If you go out to the end of the week, you're looking at about a $2 move. So, unless you're selling at the money, unless this is somehow like, I mean, the Ivy rank is slow enough. Like I'm not going to trade this. If I did a, iron butterfly, I can get $2.26 on a $1.84 move, which makes sense unless it blows up the directional trade, right? If I sold a 58 and it goes up, let's say MO jumps like $3. Well, I'm down by, 80 cents. So I'm not going to take an earnings trade on this one. I own the shares. I bought the shares back at $40. I own the shares. I'm adding cover calls. I'm rolling out cover calls. I'm just generating income and dividends on this trade. Earnings is not going to be exciting on a company like this. Okay, Tesla back up to 286. Tesla had a pretty big volatile day. Look at that wick. Tesla was down on the day, up on the day. Look, if Tesla is breaking above like $300, I'm going to roll my calls out again. I've got a 257.50 by this week, and I'll roll it out again. So if earnings come in solid and Tesla is above, let's say $300, I'm going to roll this again, try to get another $3 to $4 of income. I have 500 shares. So if I roll it for $3, it's another $1,500. And that's going to add up to hopefully helping me make about $8,500 on this trade. So, I mean, I missed out. I mean, had I not covered Tesla last week, I could have been up maybe close to $4,000. I would have been up almost 20K last week had I not done anything. But little did I know that we were going to rally 60 freaking dollars on Tesla. So I've got a covered call. If it gets called away, it's no big deal. I still flip it for income. I'm looking at about 7K in income this week. If I roll it out by another week, I could probably get it close to $8,500. So that's a to be determined. Like if Tesla's above $300, then I will roll the call out another week. Otherwise, income-wise, I think since earnings are down slightly, I should see some better positions here on Tesla. Let me just take a quick peek at all my trades, and then I'll let you go for these last couple minutes. I don't think I have anything else today. Today, April. Okay, so tomorrow I've got like back-to-back webinars. Today I'm good. Let me go Tesla. Tesla. So I have some shares. That account, that account, that account, that account, that account. All I've covered calls at 257.50. The bull put spread still upside down a little bit, but that's a leap. Naked put, that's out a little bit farther. That's a leap. Covered call 257. I'm just going to let this one hang out. I'll roll it again if I can grab an extra $300 to $400 out to May 9th or even the 16th. These are looking better. So this is out to May 16th. I'm only getting. I mean, I've got potentially $3. Well, either way, like I've got a ratio spread on Tesla out to May 16th as long as price stays above 245. So the plan is if I can flip the current shares for income and then have potentially the buying power to get another chunk of shares if price were to fall back below 245, I would own another chunk of shares. But otherwise, by the time we roll into May 16th, I'm hoping that the market is either up a little bit higher, I get more decay on these trades where, I'm pulling in $3.22 of income. I'd like this to be trading for, maybe $200 of profit, maybe $250 of profit, and I'll close it as opposed to waiting all the way to expiration. So if Tesla does get above $300 this week, there's a very good chance this one will quickly show me like $100, $150 of profit. If it's more than that, I'm probably going to look to take at least 50% profit, move on. This one, that's fine. That one's fine. That one's fine. That one's fine. Covered call 257, fine, 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 fine. And this one, these are actually looking pretty good. May 245. What this one? This one is up around 70% of profit. Not awful here. Which account is that? Okay. I think I'm going to take this one off. So this one, I guess, well, shit, I'm going to choose Tesla. So let me put in that Tesla. It's a 111, 205 by 200 by 195. So it was pulled in for 284, and it's showing 198. So about $200. So I'm trading this. This is now trading for maybe 85 cents debit. So I'm going to try to close that for 85 or less tomorrow. So close that. This one's fine. This one is willing to close. This one's willing to close. Let me see if I can actually close the 195s. Right now, can I fill this at 87 cents? Ah, darn it. All right, I'll wait for tomorrow. So they close it right up at 4 p.m. Sometime like ETF wise and some indexes you can get out just after 4 p.m. So anyway, that's going to be a to do for tomorrow. All right, tomorrow I'm also going to be pricing in some earnings trades. I'll look at some Mag 7. I'll price them out. I'll look at some other ones. Let me see if I can do a quick scan and get a list going for this week. So for my newsbreaker service, we'll go into earnings to May 2nd. Okay. Oh my gosh, I've got 53 stocks this week. Boy, let me jump up the EVR. 34 stocks. Okay. Well, crap. That's going to be a busy week. So, Snapchat, I should have some profits running on Snapchat. I did a synthetic last week on this one. Snapchat here. So I did a synthetic long that is up around $100. I have shares and I'm looking at called away at $10. We've already had earnings on Snapchat, I believe. I think. Nope, we have earnings. Earnings this week. Come on, Snapchat. If I get the 300 shares called away, that's a good little income trade. If I get the synthetic, that should be up another like $2. So I could probably make close to $1,000 on Snapchat if I get it called away this week. So anything greater than $10 is good. So I'm going to watch that one for a watch list item. So stocks, we've got Mag 7, some other notables here. Try to find some goodies that I might be looking at. Price wise, WGS. Oh my gosh, that's crazy sensitive. That might be illiquid though. RDDT, that's Reddit. That's $118. Roblox, Roku, Team. Let me take a screenshot here. All right, so I'm gonna filter out some of these already. Ones I'm interested in. So interested. Snapchat, I'm watching. I'm not. I might price that one in. I just don't mind having it. The shares are fine. SMCI, Reddit, those are okay. Roblox is okay. Roku's okay. Team is okay. I'll look for some liquidity levels in the other ones that are in the teens. JetBlue is dirt cheap. I hope it goes freaking up. I have some shares of that. ALGN, just better prices. Shake Shack, I think, SHAK. Spotify, Meta, Robinhood, Moderna, maybe. And maybe some Norwegian Cruise Line, some Etsy. All right. So we'll play around with those. I'll spend tomorrow. That's 1, 2, 3, 4, 5, 6, 7, 11, 12, 13, 14, 15 of these 34. Of these 34, about 15 stocks I will price out and try to find some good entries and calculations on them. Okay, so I'll price those out tomorrow. And so my newsbreaker service will probably throw in a couple of trades if I can find the calculations that I like. All right. Okay, everybody. Thanks for being here today. Happy Monday, and we'll come back and do it again tomorrow. Kindly click the thumbs up button, like the video, like the session if you're watching this recording. Thanks for tuning in. If you're watching this live, as always, love getting some Q&A live, and I'll come back and do it again tomorrow. All right. Thanks, everybody. See you. Bye.